Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Tricia Scarlata, head of education savings at JP Morgan Asset Management, as well as Kristia Adrian, executive director and 529 specialist at JP Morgan Asset Management, to discuss tuition inflation and the benefits of 529 plans. Of course, September is 529 plan month. Tricia, it's great to have you and Chris. And I'm going to start with you. This is a big topic, the cost of college and tuition inflation. Can you comment on trends that you're seeing on both of those?
I wish I could tell you I'm seeing things come down. The trend is up, up, up every year, somewhere on average around 6%. I mean, right now you're looking at a 4-year cost of a public education at $100,000 and a 4-year cost at a private institution over $250,000. Either way you shake it, it's expensive. And you're seeing students now more and more go to public schools, but public schools out of state. And when you go to a public school and you don't live in that state, that school costs just as much as a private institution. So we are not seeing the numbers come down. Unfortunately, we're seeing the numbers go up, and we're seeing about 81% of families just not being prepared and unfortunately having to make choices based on cost.
Right. And of course, part of that is funding it, right? So let's talk about financial aid. What can an average family expect to receive in aid? Because we understand there are changes happening with the FAFSA. Can you give us the idea of the changes and how that will impact families?
Sure. I mean, look, the reality is college has gone up over the past 10 years, 23%. Aid continues to go down, right? And it's gone down 6% in the past 10 years. And the reason why is because there's more and more people out there that need money, because it's the prices are going up every year, so more people need more aid. The average family in 2021-22 school year got somewhere around $12,000 total in aid between scholarships and need-based grants. Now, remember, grants are need-based, just like I said. So if you look at just scholarships, the average family got somewhere around $6,000, nowhere near the amount that they were hoping to get. Most families hope to get at least 40% in aid. In terms of how the FAFSA is changing, there are good and bad points to it. There are some families that are going to be significantly impacted positively and some that are be negatively. I will point out one thing that I think will resonate the most. When a child went to school previously, when a family applied for aid, they would get a number, and that number would apply to their entire family. And so if they got a score of, say, $50,000, that would be for their entire family to go to school. That's the aid that they would that would be expected to pay, not the aid. That number is changing dramatically going forward. That number that they are going to get going forward is going to be per child. So a family that before maybe had 2 kids going to school and were expected to pay $50,000 will now have to pay double going forward. So that's the biggest change with FAFSA, that sibling discount that we used to get in the past that will be going away in 2024.
Chris, a couple questions for you on 529s. What are the major benefits of a 529 plan, and what is considered a qualified expense?
Yeah, so 529s were created back in 1996 by the federal government. They are the premier way for families to save and invest for college. And it's really 3 major benefits that people invest in them for. The first are great tax advantages. I think of them very much like a Roth IRA, where it's after tax dollars that get invested, they grow tax deferred. And as long as the money is used with a qualified education expense, all of the earnings come out tax-free. So some really huge tax advantages there. And then depending on where you live within the country, you might even be eligible for a state tax deduction or a state tax credit in some states' circumstances. And then the second major benefit is an estate planning benefit. This year, the gift limit is $17,000 per child. If you're married, you can gift up to $34,000 per child or grandchild. And you can actually accelerate that within a 529. You can multiply those numbers by 5. So for an individual tax filer, you can gift up to $85,000. If you're married filing jointly, you can gift up to $170,000 per child or grandchild. Great way to carve that out of your estate and have those earnings start to compound right away. And then the third major benefit, major benefit is the control and flexibility, where the account owner always maintains control of the account, even when the child reaches the age of majority. You don't have to turn the account over to the beneficiary. And the flexibility is where you can change the beneficiary on account up to first cousin. And the other flexible part so that it doesn't have to be used for traditional 4-year college or university. You can use them for vocational school, trade schools, apprenticeships, and that list actually keeps expanding.
And Chris, can you speak to the new Secure 2.0 provision with 529 to Roth IRA rollovers?
Yeah. So the great news is that qualified expenses I had mentioned keep expanding. And in December, Secure 2.0 passed. One of the provisions of the 92 provisions that were in Secure 2.0 was specific to 529s. It's where starting next year, in the year 2024, you can now start to roll over up to $35,000 from a 529 plan into a Roth IRA. Now, there are some guardrails around that. You have to have held the 529 15 years or longer. And also you're rolling over up to the Roth IRA contribution limit. So for a lot of families, Tricia and I actually hear all the time, what if my child doesn't go off to college, doesn't need it for traditional qualified expense? The great news is you can now use it as a future retirement account up to 35 grand for your child or your grandchild. So we think that's a wonderful, flexible advantage that was just added to 529s.
All right, Chris and Tricia, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.